So in this video, we are going to look at the problems in process costing. So we'll start from the first problem. So a product passes through two processes. The following details relate to process A. You are required to ascertain the process cost to be transferred to process B. The direct materials is 100 units and 12,000 rupees. Direct wage is 8,000. Direct expense is 5,000. Overheads incurred is 11,000. Input units is 1,000 and output units are also 1,000. And there is no loss of any particular unit. Okay, so we could use this this format here. Okay, we could use that and we can try to get an answer. So we'll start. So the materials which have been input is 1,000 units and its worth is 12,000. Then labor we have 8,000. Okay, either it's labor or wages you put, it's 8,000. Direct expense, okay, direct expense is 5,000. Okay, there is no abnormal gain or loss, so we can remove that and we'll get the total. So total would be here 1,000 and here it would be 25,000. Now the finished units which is going to be transferred is again 1,000 and the rate we don't know. Okay, we don't know the rate, so we'll just put it as a question mark. There is no transferred. See, it's getting transferred from process A to B. Okay, so 1,000 would be here. So finished, it's not a finished unit, it's a transferred units. So this amount only we don't know. There is no normal loss, no abnormal loss, so both we could remove. And the total, okay, this total would come to this side. So in terms of units it's the same, and in terms of the amount it's going to be the same. Okay, so the amount would be 25,000 here. Now we have to find out like what is the cost per unit of the transfer. Okay, so to find out that, we will put it in it here. So the cost of input is how much? Is 25,000. So there is no normal loss or scrap, and the input units is 1,000 and there is no normal loss units. Okay, so the answer would directly come to 25. Okay, this is for per unit. So cost per unit is 25. We can just like put it there. So that's about this sum. You might get this kind of a sum for 2 marks or something like that. So we'll move on to next sum. Okay, so each sum would be incrementally little bit different. So that's how we are going to do. So we'll copy the same format here and put it here, and so we'll start. So whenever you name, whenever you have a process, okay, you have to name it. So this process is called as process A, and it is an account. Okay, it's an account. So you have to mention that, and we'll move on to the next problem here. In this problem, we'll just look at it. The following data relate to process 1. So it is a process again. It's a process. Okay, 1, and it is an account. And the material input is 2,000 units costing 15,000. Labor cost is 10,000. Overheads is 8,000. Normal loss is 5% of input. Okay, calculate the average cost per unit in process 1 and complete the process account. Okay, so this is going to be the actual output. Okay, and as this is process 1, there should be another process, so it's going to be only transferred units, right? But we'll work out the sum. So there are 2,000 units and the price is going to be 15,000. Labor is going to be 10,000, and there is also overhead. Okay, there's an overhead. So overhead is an expense. So overhead is 8,000. So put together we have 2,000 of units and 33,000 of total. So this is going to be transferred units here, right? This is going to be a transfer units, but he says that there is a normal loss. Okay, there is a normal loss. So normal loss units, he says it's going to be 5%. Okay, it's going to be 5% of the input. Input is 2000 units, so 100 units should be the normal loss. See, the normal loss, okay, if this is going to be the normal loss, they have not given like what is the transfer units. So the transferred units, we can assume it to be the balance. So the balance is 1900 units. Okay, see, both this 1900 and this 100 has to be valued. Okay, so to value it, we have the cost per unit formula. Okay, we have the cost per unit formula. See, the question says that process costing with normal loss without scrap value. So there is no scrap value or anything here. Okay, we cannot sell this normal loss at any price. Okay, we cannot sell it at any price. So this value will become 0. Okay, this value will become 0. So the balance value, we have to find it out. So we'll start. So 33,000 is the total amount. Normal loss or scrap value sold, okay, is 0 because there's no value given. Okay, actually there's no value given in the sum, so it's not an assumption. If there's no value given for scrap, it is only 0 worth. And totally we have 2000 units of input units, and we can deduct the normal loss units, which is 100. Solve this. Okay, solve this, you will get the answer. Okay, so let's see how much answer we get. Okay, we get 17.36. okay, so if we multiply 17.36 into 1900 units, you should get 33,000 of amount. Okay, so let's see. Yes, we get 32,000 like that. Okay, roughly we get. So if you want, we can just put 33,000 directly there. Okay, hope you got the idea here. So the idea is, put all the inputs on this side, put all the outputs on this side. As normal loss, no amount is given as scrap, you cannot put any value, so it is 0. And the transferred units is only, they have not mentioned it, the transfer units. It means that is the balancing amount. So 1900 is the transferred units. The amount is going to be 33,000 only, but the cost per unit, okay, the cost per unit is 17 per unit. Okay, so ensure that you understand the cost per unit. See, whether the sums asks you for cost per unit, find it out. If the problem doesn't ask you, you don't need to find it and show. You can just directly balance it. Okay, so that's only for this sum. For next sum, we have to find out cost per unit by default. Okay, so we'll start. So we'll start from this sum. This sum has a normal loss, and the normal loss has a scrap value. So A and Co produces a product through two processes. So the product has to move through C and D. The following details pertaining to process C for January 2007 are available. So they have given that. So they say that material is 600 units of 11,000. So this is the input here. Labor is 9,000. Indirect expenses 8,000. And normal loss in the process is estimated to be 6% of the input, which possesses a scrap value of 28. Okay, so again here they have not given you the output. Okay, so let's start with this problem. You have 600 and 11,000, 9,000, 8,000, So this is called as an indirect expense. And now we have to find out the normal loss. So normal loss would be 6% of, okay, of the input. So that is 600 units. So we can take that number and we can put it here. So that's going to be 36 units are normal loss units here, and which has a scrap value of 28. So you can multiply the 28, okay, which has a normal loss value of 28. So that you can put it here. So that comes to 108. So now you can total it. So total comes to 600 and 28,000. So copy this. So we got the amount here. So the balancing figure would be for this. So the balancing figure would be 600 minus, this is a unit that is going to be transferred, as well as this is the amount. Okay, so this is the balancing figure. Okay, but we have to work out the cost per unit. So let's work out the cost per unit. The cost per unit would be like this. The cost of input is 28,000 minus the scrap value divided by the normal units is 600 minus 36. So this is a formula. You have to work out in this particular format only. So we got the answer. The answer is 47.8. Okay. So this is about this sum. So again, here also they have not given you the units to be transferred. So the units to be transferred is assumed to be the balance amount. Okay. This is normal loss and the balance. This you can find out through either through balancing figure, or if you multiply. Okay. If you multiply this number into the normal the transferred units, if you multiply, it will give you the same answer. See, it will give you the same answer. So however you want, you can compute it and you can get the answer. So that's about this sum. We'll move on to the next sum. So before doing this, I think we'll copy the sum and we'll start. So again, I have missed the naming the process. This is called as process C. So this sum has process 1. So we'll start. The following data relates to process 1. Material input is 1000 units of 10,000 rupees. Labor is 8,000. Overhead is 6,000. Normal loss is 4% and it is sold at 12 rupees per unit. And it has an actual output of 960 units. Okay, so I think it is typically like what we did earlier, the same sum only here, but it's just for repetition purpose we have it. So we'll start. So it's going to be 1000 units and 10,000 is the material cost, 8,000 is labor cost, and 6,000 is overhead cost. And the total is 1,024,000. Okay. So we'll start here. So the normal loss is going to be 4%. Is 4% of 1000 units it's 40, and it could be sold for a rate of 12, and the balance would go to here. So it is 960 units. See, the 960 is the same number which they have mentioned. Even if they don't mention, you don't need to worry, you will still get the same transfer item only. So this is a balancing figure. So try to find out the cost per unit here. So the cost per unit would be like this. It is going to be 24,000 minus the scrap value 480 and units 1000 minus 40. So that comes to 24.5. That comes to 24.5. So here in this sum, he is asking you to create a scrap account. So scrap account is usually the normal loss account. So we'll prepare one account for that also. So we'll prepare the normal loss account. So the normal loss account works like this. You have normal loss here. So the same amount and units would move on to normal loss, and it would be referred to as process 1 account. Okay, it would be referred as to process 1 account, and this process 1 account, okay, it's a normal loss where this is a kind of a scrap here. Okay, it is a kind of a scrap. So this scrap could be sold, right? This scrap could be sold, and so we could put bank here. So this would be like sold as scrap. Okay, so this scrap has a value. How much value it has? It has the same 480 of value. So we could put here. Okay, this account gets balanced. Okay, this account gets balanced, so we don't need to worry about it. Okay, so that's about this sum. We'll move on to the next sum. So here we have abnormal losses with no scrap value. Okay, so what is abnormal loss? Any loss which is more than the normal loss is an abnormal loss. Okay, so we'll start with this problem. Prepare a process account from the following along with abnormal loss account and normal loss account. So we have to prepare two accounts here. Additionally, materials issued is 2000 kgs at 100, wages is 1 lakh, overhead is 30,000, and normal loss 8% of input. So actual output is 1800 kgs. Okay, so what we'll do, we'll copy this entire stuff. So we'll start. So there are 2000 kgs which have been input, and it is 100 rupees per unit. So we have to multiply this with 100. So that comes to 2 lakhs. Wages is 1 lakh, and overhead is 30,000, and that seems to be a normal loss of 8%. Okay, so I think we have to copy the transferred units at least. So we can start. So the actual output seems to be 1800, so that they are clear about that. Normal loss we have to calculate. So normal loss is 8% of 2000. So that would be, okay, that comes to 160. So we can total this side. So this comes to 2000 and this comes to 3,30,000. 3,30,000. Now when you add both these numbers, it comes to only 1960. That is, the transferred units is 1800. The normal loss is 160. So put together, it comes to 1960 only. But where is the balance 40? Okay, where is the balance 40 gone? The balance 40 is the abnormal loss. Okay, is the abnormal loss. So we can put that. That's an abnormal loss. So now this normal loss, okay, could be sold at a price. No, it could not be sold because the question says that is an abnormal loss with no scrap value. So the scrap value would be 0. There's no scrap value here. Okay, but for abnormal loss we have to value it. Okay, we have to value it. So we have to value two things here. One is this, one is this. In previous problems, okay, what we did is, when normal loss is 0, the total amount here would directly go to here. But we can't do that in this problem, because this 3,30,000 has to be split between the abnormal loss and transferred units. Okay, to both it has to be split. So to split, we have to find out the cost per unit. So now only like cost per unit is useful for us to find. Okay, so we'll start. So total is 3,30,000 minus, see there is no scrap. Okay, so it is 0. Close it. Divided by units is 2000. That is normal loss units. Okay, that is 160. Close it and we'll get the answer. Okay, but what we'll do, we'll show the workings here, or else you can't understand it. So that's about the cost per unit. Cost per unit, I think there's something, okay, wrong or something. I think number of zeros, I think we have done it more. Okay, I think it is now correct. Okay, so now it comes to 179.34. See, now we can multiply these numbers. Okay, so 1800 into 179.39, we'll round it off a little bit, so you will get this answer. Here it is for 40 units. So if you add both, their value comes to 3,30,000. Okay, so that's about this problem. But we still have a little more to working, because the question asks us to also create abnormal loss account and normal loss account. So first we'll create the normal loss account. We'll also work out the abnormal loss account. So we'll start. So whenever you have a process and there's a normal loss, okay, you have to transfer it. So transfer is 160 units. See, 160 units, we don't need to, if you want you can transfer it, but it is not useful even if you transfer. See, amount is 0. Okay, there's nothing that you could realize here, and the bank also you can't like do anything. Okay, so you don't need to actually put scrap. Okay, scrap is also you don't need to put. But for normal loss account, so for normal loss account, okay, we have to transfer it. So we have to transfer this. We have to transfer all of this goes to here. Now when it goes, it would become an account called as process account. From here it moves to there, so it becomes a process account. So this 40 units and this amount, okay, all it cannot be sold. Okay, number one, it cannot be sold. It is only a loss. Okay, so where will we transfer this? We will transfer this to by P and L account or SOPL. Okay, or SOPL. So it gets transferred to this account. So to close this account, you just have to put the value and do this, right? You can now, you have closed effectively the account. So if you want, you can put it under one line. You have closed the abnormal account. For normal account, I don't think you have to even open it, because it's like nothing comes here. So you can just like, you don't need to show it, but as a question asks you, you just have showed it. Okay, put this as normal loss account. So that's about this sum. So as and when we little bit progress higher and higher, the questions will become little bit tougher and tougher. Okay, so we'll move on to the next sum now. So we'll move on to sum number 6. So here you have abnormal gains with no scrap value. So if this is going to be the problem, how we are going to solve it? Prepare a process account from the following along with abnormal loss account and normal loss account. Materials issued 2000 kgs at 100. Wages is 1 lakh. Overhead is 30,000. Normal loss is 8% of input and actual output is 1900 kgs. Okay. So just 1 second. So we have to copy this entire sum, and then we could use it. So we'll start here. So the sum is like similar to the sum we copied. Okay, so it is 2000 of materials, 2 lakhs is the amount, 1 lakh wages, 30,000 is the overhead, and transferred units we have to actual output is given, so that is 1900 units, and normal loss is 8% of the input, so that is like same as what we had. Okay, there's no scrap value in the sum, so again this would be 0. We have abnormal loss or gain, that is what we have to find out. Okay, so if you see in this problem, on the input is 2000. Okay, but what we thought was 160 would be like normal loss, but we have actually produced 1900. Okay, we should have produced only 1840, but we produced 40 extra here. Okay, we produced more. So if we produce more, let's see how much it comes to. This comes to 2060. So our number here it would be 2060, and this amount gets carried to the other side, and here you have the balancing figure. Okay, so the balancing figure would be abnormal normal gain. Okay, it will be abnormal gain. Okay, so abnormal gain units is 60, but we don't know the value of it. Okay, so we have to find out this value and we have to find out this value. Okay, two values we have to find out. So let's start. So first what we'll do, we'll find out the cost per unit. So cost per unit is going to be like this. total cost is 3,30,000 minus scrap value is 0. Normal loss is 160 units. Okay, so the total amount is the same, 179 point this number. Okay, so we can multiply this number into, so it's going to be 1900 units multiplied with 179.39. So if we multiply this, we'll get the answer. Let's see what's the answer we get. See, the answer we get is actually higher than the debit side value. So we have to take only this value, 340841. Okay, this value is what we have to take. So we can copy this and we can put it on this side. Now this could be taken as the balancing figure. Okay, balancing figure, and the value would be this minus all these value. So it would be 10,841. If you have any doubt regarding whether it would be 10,841, you can just multiply 60 into 179.39. Okay, you can just like multiply and see whether you get the same value. You will get the same value. So you could see here it is 10,763. Okay, see there's some rounding of mistake. Okay, you don't need to worry much about that. So it is like coming towards a similar number. So this is about the problem here. Okay, this is about the problem here. So balance figure is the important one. So the next step is to find out the normal loss. So the normal loss is going to be 160 units. Okay, normal loss is going to be 160 units, and the abnormal gain, okay, the abnormal gain that we have, that has to be transferred. So that goes to this side. It goes to this side, and we'll amend the numbers. So this would be 10,841. Okay, see this 10,841. Okay, directly goes to the P&L account here. Okay, it directly goes to the P&L account. So it is P and L account. It goes here, and abnormal gain is a process account. In abnormal gain, see, this could be either a loss or gain account, that doesn't matter. It can be a gain or loss account, that doesn't matter. You can have both, because if you have abnormal loss, you have the process account here, and if you have a gain, you will put it here. Okay, so either way, this is totally goes into a normal loss. The scrap value could not be sold as anywhere, so again it is useless to put bank here and put value of 0. It's useless. Okay, so you don't need to actually show the process account, but as the question asks, we have to show the we don't need to show the normal loss account, but as the question asks, we are doing this. So that's about this problem. We'll move on to the next. Let's look at the next problem. So the next problem has, prepare a process account from the following along with abnormal loss account, normal loss account. Material issued is 2 lakh kgs at 100. Wages is 1 lakh. Overhead is 30,000. Normal loss is 8% of input, which can be sold at 20%. So the difference is you can sell it at a value. So how do we work out this sum? So we'll start. So we'll start from the process account. We'll start from the process account. So value is, units input is 2000, 2 lakhs, wages is 1 lakh, and overhead is 30,000, and the total actual output is 1800. Okay, it is 1800, and there's an 8% loss Okay, 8% of 2000 units is 160. That also we got. So what should be the abnormal loss? Okay, see, they should have produced 2000, but with the normal loss of this, okay, both these put together, the normal loss and the transfer unit is only coming to 1960. That means 40 is an abnormal loss. 40 is an abnormal loss. So now we have to value these. Okay, we have to value these elements. So let's see how we will value, because this is not valued, this is not valued. Okay, so we don't know, we know that it is 1800, but we don't know what is the amount of the value of per cost per unit. That we don't know, that we have to work out. So when we work out, it's going to be 3,30,000 minus scrap sold or normal loss. In the last problem, we never had this scrap value, it was 0. But in this problem, we have a scrap value, and the scrap values, each unit could be sold for 20. So we'll get this here and we'll put it here, and our answer would be 3,200. So we have something here to deduct which we never had in the previous sums, and when we do that, our answer will change, our cost per unit will change. So our cost per unit is 177.6. So we can use this number. It is 177.6. Here also it will be the same number. So this would be the value. So now the answer should tally. Now the answer, okay, the total of these should be 3,30,000. Yes, they come to 3,20,984. That's close. Okay, we don't need to worry. It would not be like perfect, it would be like rounded off. So now we have a normal loss account. Okay, we are selling 160 units of an item at a normal loss price of 3,200. See here, this would go to the bank. Okay, this will go to the bank. So to bank we'll transfer 3,200. Okay, we can transfer 3,200. So here if you see, there is also an abnormal loss. Okay, the abnormal loss is that abnormal loss value is 7,104. Okay, that's the abnormal loss value. So this abnormal loss value, we don't need to transfer all of them to the P&L account, because abnormal loss is also a unit. Okay, it is a unit, something like a scrap. Okay, they thought 1,860 units could be produced, but unfortunately, 1,840 units could be produced, they thought, but unfortunately 40 was also like defective. Okay, so this defective could be sold for scrap, right? It could be sold for scrap. So what we can do is, we can transfer this to the normal loss account. Okay, we can transfer this to the normal loss account, from where this would be sold, this can be sold. So to normal loss account, you can transfer all this 40 units. Okay, you can transfer all this 40 units, and this 40 units has a price. Okay, at what price you can sell them? You can sell them at 40 into 20 rupees. You can sell at that rate. So that would come to 800. So when you transfer it to 800, okay, let's see the P&L account balance. Okay, so we'll close the account. If we close the account, this is the value. So what value goes to the P&L account? The P&L account value will be the total abnormal loss minus the scrap that could be sold. Okay, so 6,304 is what we have to send to the P&L account. Okay, we don't need to send the entire ones. We have to just send the additional. So this is the balancing figure. If you want, you can mark it as balancing figure. Okay, so now our abnormal loss account is over, right? So this 40 units which could be sold for 800, this also should go to the normal loss account. Okay, this also should go to the normal loss account. So once it goes here, this would be named as abnormal loss account. Okay, from there it has come. So 800. So totally all this put together, okay, all this put together can be sold in the bank. So we can close it now. See, we can close it now at this rate, 200 and 4,000. Okay, by bank it would be this. So bank is not bothered about the units which you have. Okay, what they are bothered about is the amount. Okay, so the bank is going to sell the normal units as the scrap. So this is a lengthy problem. Okay, even the question seems to be like very small, this is a lengthy problem. And if they ask you only like process account, it would be like 5 marks. But if they give you these additional accounts, means it could go to 8 marks or 10 marks. It could go, it depends upon the examination only here. So we'll move on to the next sum. So the next sum is an abnormal gains with scrap value. Okay, that's a kind of sum. So prepare a process account from the following along with abnormal loss account and normal loss account. Materials is 2000 kgs at 100 rupees. Wages is 1 lakh. Overhead is 30,000. Normal loss is 8% of input, which could be sold for 200. Actual output units is 1900. So to solve this, okay, to solve this, we should have the accounts. Okay, so what we'll do is we already did an abnormal gain sum. I think with the similar number only we did. We'll copy directly from there. So slowly, as and when we do this sum, we'll change things a little bit. So we'll start. So material is correct, material amount is correct, labor, overheads, all these are like correct. And we might have an abnormal gain. Okay, we don't know like whether we'll get or not. So that we can't put, okay, that we can't like put it. And transferred units, okay, the units transferred is 1900. And we don't know the value again. We have to close the value. Normal loss is 20% of the input, so that is 160 units only, so we don't need to worry about that. But this loss could be sold. Now it could be sold at a price of 20. So that comes to 3,200. So if you look here, it comes to 3,200. Now we can close the accounts. Let's see which side is higher. So this side, it seems to be the units are higher. The units are coming to 2060. And the balancing units would be 60. That is an abnormal gain. So to value our abnormal gain and to value our transfer units, we have to work out the cost per unit. We have to work out the cost per unit. So cost per unit would be, cost of input is 3 lakhs minus scrap value. Scrap value is 3,200. Then 2000 minus 160, all these are like perfect. So let's get the answer. So we got 177.6. So we got this amount. Let's total both. It comes to 340, 640. 340, 640. Copy this, paste this side. We have to again value this. To value this, we'll work out here. So let's add all of them. Let's see whether we get the answer. Yes, we get the similar kind of an answer we get. So either you can find it out as a balancing figure or you multiply and get it. Okay, either way you do, you will get the same answer. Okay, so our up to process account and normal and cost per unit is over. We still have one more region, normal loss. So we'll start. So normal loss is 1600. We could sell it at 3200. Okay, the total amount we could send it to bank as scrap value, but unfortunately we can't do that. Why? So we have an abnormal gain. Okay, we have an abnormal gain of 60 units. This 60 could be sold. Okay, could be sold. So if you sell it, you will get around 60 into 20 you'll get. So you'll get 60 into 20. So that comes to 1200. Okay. I think we have to get this number. Okay, we will first transfer. So we have an abnormal gain. We will transfer it to here. So the value is this number. So what has happened is, okay, we have a value of this much. Shall we transfer all of them as gain? The answer is again no. We can't transfer them as all of them as gain. We can't transfer this full amount as gain. Okay, why we can't do that? Okay, why we can't do that is because we can put it like this. We thought 160 units, okay, 160 units will be damaged, okay, will be damaged and we can sell it for scrap. But abnormal gain means, okay, whatever you thought will become damaged has not become damaged. Okay, so how many units have you saved? It's called as abnormal gain. You thought 160 will be damaged, 60 is not damaged. So what you have to do now is you have to transfer, okay, you have to transfer first to the normal loss, where 160 should have damaged and you could have sold, but unfortunately because they are not damaged, okay, how many units? 60 units were not damaged, okay, and 60 units could be sold at 20 rupees. So you could have made 1200, but unfortunately you could not make it. Okay, so as you could not make it, what happens is from abnormal gain account, okay, abnormal gain account, you get this number, you get 60 units. Okay, 60 units, 1200 you have saved. Okay, the balance only you can send it to bank. So the balance would be 100 units that could be sold at 2000 rupees. Okay, so this is a balancing figure. So hope you got it. So if we close the account would be like this. Okay, so that's about okay, so that's about the normal loss account. Let's think about the abnormal gain account. So we have transferred from process account this, from normal account this. What about the balance number? See, the balancing figure here has to go to the P&L account. So let's see what's the balance account. The balance amount should be this. So this is the balancing figure here. So this is a balancing figure. Okay, so balancing figure is 9456. This is a gain that we could send to the P&L account. Okay, we could send it to the P&L account, and this is a scrap value we could have gained. Okay, we could have gained. Okay, we have gained. So that's about the abnormal gains with scrap value problem. Okay,